Hello everyone, welcome back to a new video here on Nativitas. It's been a while, well actually not that long, I think half a month. For me that's not too long. But we're back, and wow, what a ride it has been the previous 2 weeks. I mean, August definitely has been eventful. So the markets dropped in the beginning of August. Right now as I'm recording this, it's the 16th of August. But the markets dropped in the beginning due to the Japanese, basically increasing their federal rate, or whatever they call it over there, basically their Fed rate, and that caused a certain arbitrage play not to work out anymore, and thus a lot of securities got sold to basically close those positions. Now, that has caused a lot of markets, a lot of stocks to basically go down for no real fundamental reason. And it was too bad that at the time I didn't have any cash. I was all in on securities already, alright? I was already timing in the market instead of timing the market. But at the time I didn't have any cash, so I wasn't able to buy any cheap deals, badly. But now I still am doing fine, but at the beginning of this month I did get a little bit of a heart attack because of course a lot of positions were down, except Meta. I didn't make a separate video about Meta. I did make one about Google. Of course Google's share price declined after the earnings report, as some of you probably know by now. But Meta's rose a tremendous bit because of an awesome earnings report. I mean, if we just go to Meta stock here, and we go to the 1 month chart, you see it's up 10% this month. It's up to $537. So Meta stock rose an enormous bit. My position in Meta is about 50 shares with a total gain of 13% this year. Now, I started a position at the average buy price of about $472. And I started my position about a couple months ago, and I just increased my position gradually throughout the months. But I'm pretty much done now with buying Meta. I'm gonna keep it at 50 shares. I'm comfortable with that. I might even trim the position if it continues to grow a whole lot more. But overall, I'm very content with the stock, even though it absolutely the according at least to Buffett's principles, especially regarding its management, it's a terrible stock in that regard. But I think overall, just the fundamentals, the growth perspectives, and whatnot, I have a lot of faith in this stock. It's also 51% of my portfolio, or actually it's 50%, a little bit less than this one because this one only tracks my stocks and not my ETFs. But my ETFs is only like a $500 position anyway, so it doesn't really matter that much. I have 26,000 or nearly 27,000 right now in this position. My overall portfolio is about $50,000. Shouldn't be that hard to calculate with these numbers, but I'll do the thinking for you. We can we look at we can see when I bought. Let me just go back here. We're also going to talk about Starbucks, by the way, because I think it's going to offer a seriously intriguing case study for management. But that's later in this video. As you can see, I purchased gradually shares continuously under $500. I think there's one purchase here above, but pretty much my buy price was below $500 because my fair value price was about $530 to about $550. So with a small margin of safety, that allowed me to buy quite a good amount of shares. And I'm pretty much up on all purchases now, so that's good news. I started March 5th, 2024. So you can pretty much like 5 months ago I started a position, but started seriously buying in about 4 months ago. So that's good to see. That's 13% gain in 4 months. Not too bad in my opinion. Amazon's earnings report was absolutely terrible. I mean, let's face it. If we go back a month here, this is where the earnings report happened, about nearly 14% decline. As I already said, at this time I didn't have any cash, so I couldn't buy any Amazon shares, which was quite disappointing because I would have loved to buy some additional shares at about $160 or whatever. Now it's back to $180, but hey, you know what, you cannot change history, and I was already quite deeply invested into the company. Overall total gain is about 5%, which is actually quite lackluster. This is definitely the laggard of my portfolio, because if we look at when I purchased, it's about February 2024, so it's about a half-year position now, and its performance has been about 5% on average. Now, that is not terrible regarding 5%. I mean, if you double that, then eventually you get to 10% annually, which is a good market rate return. But considering that the S&P 500 is up about 17% this year, it is quite a lackluster performance. But you own stocks for the long term. Maybe next year Amazon, or maybe this last half year. I mean, we're not finished with the year yet. We still have like 5 months more. Well, no, like 3.5 months more to go. So maybe the stock will outperform the S&P 500. You never know how it will go. Maybe it'll approach the $200 per share in the future. At which point, very likely it will outperform the S&P 500. I'm very confident in my Amazon position here. Overall, great business, has a strong cloud business, very profitable. Its e-commerce is doing all right, but I believe the e-commerce, they need to do a little bit of margin expansion there, because right now the margins are just very, very slim. It's barely profitable. Also, they have a lot of other businesses. They also have some retail stores and whatnot, like physical stores. I'm not too excited about that segment of the business. So there are quite an amount of businesses that Amazon endeavors in, but overall, its cloud business is pretty much keeping the whole business afloat. Let's just face it. I just hope they will do some margin expansion. They also are increasing in advertising, which is very good to see. As you can see, I'm big on advertising, as you can see here. It's not really it's more coincidental, actually. I never really thought it would be big on online advertising, but apparently that business seems to be very, very intriguing to me. Of course, it's a business with big margins and whatnot, so that's of course always very attractive. Overall, I think Amazon will do fine over the next 5 to 10 years. I think Amazon will definitely outperform the overall market. So I'm very confident about Amazon. Also, its whole capex story is now in the past, right? It has invested a lot into data centers, into fulfillment centers, into all this capital, and it will now start to reap its fruits from all that capital investment. So I think the overall, the upcoming few years for Amazon are going to be very exciting, and overall very, just basically very good, right? Then here we have Alphabet. Now Alphabet is kind of my, the first individual stock I bought. I bought the first part in 2023. It doesn't record it here because it was actually a stock on the German stock market. So that was quoted in euros. And then eventually in February, I decided I wanted to have it in dollars on the NASDAQ. Now, why? It wasn't really an active thought. It was more just that I really would like it to have it on the NASDAQ. And also, I thought it would be a bit better, because then my quotations are shown in the actual value that the stock is quoted in, and also I would have less of that currency exchange rate thing going on that would kind of misrepresent my performance on these stocks. So it was more of that than really anything else. Also, my country where I live doesn't have any capital gains tax. So in that regard, it didn't cost me any taxes as well to sell and then buy back in. So it was overall pretty okay. It cost me like $2 for transactions cost, which I thought was, it was fine. So I bought in at 145.70. Actually, it was lower. It was a far, far lower price, actually. It was more like 138, something like that. So that basically my performance has been is being a bit suppressed here. My performance technically more like the 16.88 on this position, but you know what? We'll deal with it. And of course I bought, and then in July 20, when it was like $180, somewhere around that range. Well, something like July 20, I don't know exactly. I sold like 20 or no, like 30 shares at 183, and then eventually after the earnings report, it dropped to 173.65 or 174 or whatever, and I bought 5 shares back because I thought it was a little bit undervalued. So it was a little bit of a swing trade. You could say it was successful in regards that I sold it and after that it dropped. Otherwise, you could also say it was less successful because, of course, I still lost money on a minor portion. But I made that back because the rest, well, you guess you could see, I've sold 30 shares and now I bought 5 back. So where are the other 25 shares? I invested that in Meta, big time. You can see it over here. It was July 19th. I bought 11 shares at $470 because I thought it was terribly undervalued, and that position is up tremendously, as you can see. So overall, a very, very successful swing trade for now, at least. But I'm still very confident in Alphabet, and the reason Alphabet is down this month, 12.3% down, while the S&P is up a tremendous bit here. Well, it's not up, but it's at least down a lot less, only 2% compared to 12%, and that's majorly also because of this news. The US considers a rare antitrust move, breaking up Google. They basically lost the Department of Justice antitrust case, and then the news came out that the US is considering maybe breaking Google up, and of course that caused the stock to collapse. Now, do I think that it's a likely move? I seriously doubt it. I don't see them breaking up Google. Last time that happened was with AT&T in like the 80s, so 40 years ago. And also they considered it when in 2001 with Microsoft here, but eventually that was appealed and overruled by the Supreme Court, I believe it was. By the way, this is a very intriguing case, actually, whenever you're talking about antitrust cases. And if you want to have a little bit of a laugh, perhaps you should read this part of the article on Wikipedia, because you could just read it for yourself. It's a bit funny. At least I find it quite funny. It's actually also a little bit pathetic, but I find it a little bit funny with how Microsoft behaves and basically blatantly lying in court. But you can read it for yourself. I'm not subscribed to Bloomberg, so you cannot read the article, sorry. But I don't see this as too bad of a thing. I think actually if Google might be split up, or might have to sell a certain amount of divisions or business segments, I think that's actually very positive. Google is infamous, and this is perhaps the only part about the company that I really, really despise. The company is infamous for empire building, as they call it. So basically, the Google is holding a lot in cash, holding a lot of money, and investing into vanity projects just to expand the business, even if it doesn't make any investing sense. And that's big for Google. I mean, the management is just trying to expand the business, keep on expanding, and just trying to become bigger and bigger. While in reality, they should be using cash and all that to return shareholder value, which is just what they're not doing. So they should be buying back shares. They should be giving dividends, which they did decided to do in Q2 or Q1. In Q1 it was, sorry. But still, I think the management should stray away from that empire building behavior, because that's what they're doing. And I really do not like that part about Google. Overall, it's fundamentally a very strong business. It's a very good business. It does prove Warren Buffett's Buffett's statements a little bit of you need to buy businesses that can be run by stupid people, because sooner or later they will be run by stupid people, or something along those lines. And now I don't want to say that Sundar Pichai is stupid. Absolutely not. He's obviously very intelligent. Otherwise, he wouldn't ever be picked as the CEO of a multi-trillion-dollar business. But I do see certain decisions that they do as a little bit illogical, at least from an investing perspective. So I hope that maybe if they do break it up, which I still see as very unlikely, but even if they do, I see it as very bullish, because I do think that the segments of Google on their own are worth far more than all as under Alphabet, if you could kind of understand what I'm trying to say here. So I think actually overall for shareholders in both cases, Google is fine. I think it's actually more bullish than anything else. If you think about it, if the worst punishment that America can give to Google, or the US can give to Google, is actually a bullish thing for Google itself, then really how bad is this news? Exactly, not that bad. At least that's how I view it. But once again, you're talking about politics, you're talking about law. I don't understand law, at least not very deeply, at least not very thoroughly. But we'll have to see what this will bring. But overall, I'm not too concerned about Google. I'm actually considering buying up some extra Google shares whenever cash frees up in my portfolio. Then I would like to talk about Starbucks stock, because look at this, 20% gain in one singular day. So what exactly happened here? Because after all, Starbucks was down for a really long time. What happened to Starbucks? Why are they up? If you bought here after the dip, you'd be up almost 30% in 3 months. 4 months. That's a tremendous gain. So what happened to Starbucks? Starbucks names Brian Niccol as Chairman and Chief Executive Officer. Brian Niccol is not really infamous. He is well known from Chipotle. He was the former CEO of Chipotle, and Brian Niccol will now become the CEO of Starbucks. Now, mind you, Brian Niccol is a fantastic CEO. He absolutely improved Chipotle's business. There's no way of getting around it. The stock went up tremendously under his watch. The business performed very, very well, expanded a lot under his watch. So overall, he's a very, very good CEO. And especially the CEO that they pushed away now. I don't know, what was his name? Starbucks CFO. I don't know. But the CEO that Starbucks had was just a terrible CEO. Absolutely terrible. I don't know how they ever thought to, just basically stick with the guy for so long, because the dude was terrible. Absolutely terrible. If you just look at certain statements he made, like he didn't want to work past 6 p.m. and if he had to, you better make it be very important, right? Which is just a weird thing to say as a CEO. It's also weird to think because you're a damn CEO of a multi-billion-dollar company. You should be working 80-hour weeks because you get, first of all, compensated very liberally for it. And secondly, you're running a business with thousands of employees. Why do you think that past 6 p.m. you can just relax and go on the couch, grab a beer and watch Netflix for the rest of the evening, and next day wake up and be in the office at 9 a.m.? That makes no sense to me. And of course, I do understand CEOs are humans as well, so they gotta have some free time. Of course, you're not a slave, right? You're not a slave of the board. I do understand that part, but you're a damn CEO. You know, it's basically an unwritten rule in the job description that you work very long hours. Because you have to. You run a business, especially the size of Starbucks, especially in the situation Starbucks was in. Because Starbucks was doing terrible. And this dude was coming in saying, yeah, I don't work past 6 p.m. I mean, come on. Are you kidding me? How did Starbucks investors, or Starbucks investors, but the board mainly, ever put up with this guy is beyond me. That's just beyond me. I would be infuriated. But hey, you know what? But now they have a new CEO, Brian Niccol, so eventually they did change gears and they did pick a new CEO here. But this brings me up to another topic. And of course you have a terrible CEO, but you also have to look at the business itself. And fundamentally speaking, Starbucks is not doing very well. And that's not only the fault of the CEO. It was all up to one dude. I mean, that would be weird, right? A multi-billion-dollar business cannot really fail because of one dude. Or his decisions have to be, self-destructive. Which, were not the former CEO's actions. Let's face it, he was not self-destructive. He was just, well, as I would like to say it, lazy, but whatever. You know, if you just think about it, the thing is that, for example, Warren Buffett, and I've been quoting him a lot now in this video because, well, he has some very good lessons to teach about management. And he said that you have to invest in business that can be run by stupid people. Okay, but what else did he say? Well, he said that management is very important. But he also said that despite having amazing, and he said this in his essay, I think it was Warren Buffett's essays, version 2019, and then somewhere in the beginning of the book, I think it was something about boards and managers or something like that. He said in that part somewhere that you can have an amazing manager, but if you have a terrible business, an amazing management is not going to change much. And that's the thing. Managements can only do so much. And even though I think that Brian Niccol is a very good CEO, I have serious doubts if he's able to change Starbucks around. I seriously doubt he will be able to do that. Also because the fundamental problems that Starbucks is facing is beyond the CEO's power. For example, Starbucks has been managing an enormous boycott over the whole Israel-Palestine conflict. An enormous boycott, which is something the CEO cannot change. Just because Brian Niccol got elected as CEO now, doesn't mean that people will suddenly think, oh, well, fuck the boycott, I'm going back to Starbucks. No, that's not the problem, right? So the Starbucks business is facing issues beyond the power of the CEO, and no advertising campaign. Well, it can a little bit, but it's very difficult to change this around. So I'm very curious to see what Brian Niccol will do. So we'll have to see. I personally am not very confident he will be able to make that much of a difference, but we'll have to see in the upcoming, well, not really upcoming, but the next Q3, but mainly Q4 reports. What are those going to look like? And mainly in the upcoming years, of course, right? I mean, a lot of decisions have already been made, so in Q3, very likely you're not going to see much influence. Q4, a little bit more, but especially the fiscal year 25 is going to be very interesting to take a look at and see if he actually changed the business around or not. That was basically the video. I thank you guys a lot for watching. Mind you, I'm not an investing advisor. I'm not a financial professional, so don't take any advice from me. Investing, of course, bears a lot of risk, especially risk of part or even your complete invested capital. But anyways, I'd like to thank you guys for watching, and I'll see you guys in the next video. Thank you very much. Goodbye.